So we're going to do a big meetup in South Africa. When are we going to do that? I think we should do it. We should maybe put that down on the things to do this year, you know, a part of the New Year's planning. But a friend of mine was in Forbes magazine this month, I guess, or whatever it is, and he does something called the Awesome Fest. And so he gets interesting, talented people from all walks of life to come together, and they don't do a traditional conference. They sort of sit on the beach and pass a bean bag around as some speaker talks about their enlightenment, and then they have to do meditation to come to grips with this new information, and then drink some lemon tea. But, you know, it's awesome. Maybe we should do the same, like, you know, we could do meditation for currency traders. We can do some fundamentals, have a guy come in and show us how to build an awesome computer, and then hang out on the beach and go shark diving or something. Yeah, Henley's got it all planned out, actually. Yeah, bring in accountants and stuff. The one that Henley and I were talking about a year ago is I would do one on how to launch a hedge fund, the legal structuring, documentation, presentation, elevator pitch, so on and so forth. I think we were saying $10,000 a head. We all meet up in Cape Town, do work during the day, do wine tasting in the afternoon, fly out by helicopter, that kind of stuff. So anyways, we should talk about it. Oh, just have to have the time. So I got the recording going, so I guess we should start. Oh, there it is. Oh, it's gone. Nope, there it is. Cool. Hey there, boo-boo. Let me remind you that trading is risky, not appropriate for everyone. Your past performance, good or bad, is not necessarily indicative of future results. Please stay small, stay humble, focus on the long term, and never risk money you cannot afford to lose. My name is Wayne McDonell. I am the Chief FX Market Strategist for TradersWay.com. Thank you very much for being a client. We appreciate you. Throw your diamonds in the sky. We have competitive spreads, we have very fast execution speeds, and we have world-class customer service. And I am here every single day to be your mentor and guide. I don't tell you what to do. I teach you how to make decisions for yourself so you can be a successful, independent, profitable trader. Maybe one day start your own hedge fund. Maybe manage your family office, manage all your money for your aunts and your uncles and your grandma, whatever you want. Anyways, I do these sessions 7:30 in the morning, Monday through Friday, here at Forex.Today. Where? Oh, thank you, Forex.Today. So feel free to ask questions, technical, fundamental, trader psychology, stuff like that. And so before I started the recording, one of the things I suggested is write down all the characteristics that you think you'll need, or not even you, that you think a successful Forex trader has. What does that professional Forex trader have? What are those characteristics? And then since it's the first trading day of the year, pick one of those characteristics and work on it now. So, for example, if you want to work on discipline, wake up at 4:30 in the morning every day this year and exercise. It's easy. All you have to do is be disciplined. That's it. Do it. If you need to work on discipline, then do something that requires discipline. Yeah, optimism, that's very interesting. Well, then you should literally work on that. Find a way. At the end of this year, Joe, you should be able to give a presentation in front of a crowd of hundreds of people on how to develop and maintain and nourish, and maybe even share optimism. You should be an optimism expert, literally. Write the book on optimism. I'm not joking. Write a book on optimism. But all I'm saying is just pick the one thing and then do it. I know it's going to be hard and it's going to take a whole year. Great. Or you can just have another average year. Spend time with the orphans. All right. Spend time with a billionaire and find out that they're pretty average people. And you're like, I can do this. All right. So, okay, good. Yeah, there's something about being grateful for what you have, but there's also something about it like a hunger too. You gotta crave day and night the success that you will earn. Like you just like Shawshank Redemption, right? Get on living or get on dying. This is your year of success, and that's that, and you know. Because my worry about the orphan thing is like, well, I suck at currency trading yet another year, but at least I'm not an orphan. That's like, Jumbo, may your life not be as horrible as it usually is. Yeah, well, it's not much, you know. So it's more like the other way, like, what are you going to do this year that's going to make the big breakthrough and difference? Right? But Ryan, like, it goes back to like people, we're rationalists. Humans are rationalists. Okay? So what happens is you lose all your money in your trading account and you say, that's okay because I know 95% of people lose their money. So that makes sense. That's logical that I would lose all my money too. And you can live with it. People open their first trading account, they put 5,000 in and they say, if I lose that, it's okay, it's only $5,000. They've already lost it. Just by thinking that way, they've already lost it. Right? The other way of doing it is borrow the $5,000 from your father-in-law and then trade it. Because losing the $5,000 is unacceptable. You're right. You have to cut a limb off if you lose the $5,000. You know, so be careful with the whole orphan thing. Right? Why don't you just make a crap load of money and build an orphanage or adopt them all? Be like Angelina Jolie and Brad Pitt. Look at me. I collect children. Like, whoa, dude, that's weird. But anyways, that's how you do it. You want to benefit society, just make a crap load of money and donate it to all kinds of charities. Right? Get involved, start your own charities, do all that kind of stuff. But I'm telling you, money makes you powerful. Money is not bad. We're trained to think that rich people are bad people, money is evil, it's not going to make you happy. F you, it makes you unbelievably happy. Are you stupid? It makes you unbelievably happy. Because then if you're like, I have all this money, but I have an empty soul, then walk over to the orphanage, then build an orphanage. You're like, look at this, the world's greatest orphanage. Thank you, money. Right? I mean, money's awesome. Money's great. Gives you the power to do amazing things that the government's not going to do. The government's supposed to do all that. Well, guess what? It ain't going to do all that. So, get filthy, stinking rich and make the world a better place. Money's not evil. Evil, right? But anyways. Yeah, okay, we got some currency trading to do. Cool. Where do you want to do? Top left, bottom right, where do you want to start? Euro USD, that's in the middle, dude. All right, we'll do the middle. So what has our outlook been for Euro USD? How do we make sense of all of this? Well, we have it going up. Nice. Sweet. That looks good. Looking left. We have that kind of stuff going on, and we're smack dab there. So, if you're bull, get in on the clue train now. Like, now you want to start buying it. And that's what an amateur does too, right? Hey, Papa, look at the big green candle. Should we buy it? Right? Oh, Matthew. Matthew is a currency trader. I can't take it, Papa. Yeah. I hope you appreciated the Downton Abbey thing. That was pretty good. So looking left, we're at resistance. But if you're a bull, you could be looking for something, couldn't you? You could be looking for some rotation around town, right? So it's one of these things. Yeah, Chuck, someone recommended it the other day, so boom, looks good. The cool thing is, I talked to a programmer like, I don't know, a year ago. I'm like, hey, can you do this for me? And he's like, yeah, I can do that for you, and just never got around to doing it. So, hey, if Wyatt's done it, great. So in general, what I'm looking at here is if you're at resistance, you can't buy it. There we go. If you're at resistance, right, which I've marked here, so we're here now. If you're at resistance, you can't buy it, but you could have a general plan to say, well, what if it does this? It could do that, correct? Of course it could. And that would be a decent trade because you're selling at resistance. Buying at resistance sucks. Okay? But selling at resistance is reasonable. Yeah, Chuck, I think so too. I'd have to look it up. I saw something somewhere. Oh, I know what it is. In this indicator, I was looking at the settings. Okay, indicator, Wyatt's pivots, and then you see this plot future, plot pivots. Oh, there you go. See? Fibbits. See, plot Fibbits, false. I invented Fibbits. I invented them. I swear on whatever, I invented Fibbits. It was something I did 10, 12 years ago. It was something that we used to do. And a Fibbit is a combination of Fibonacci retracement and pivot points. Is it? Yeah, it's okay. It's in my book. Okay, so like it's cool. Like I've been around that long, where all of a sudden, like I'm starting to see this. Like it's a real thing now. I guess, or Wyatt. Yeah, I believe. Yeah, I've had Wyatt in boot camp. Whether it's the same one or not, I'm not sure. But I remember a Wyatt, but no. But this one does. So these are. This is next month's pivots. To the right. Oops. I guess you can't see that now. Yeah, these are monthlies. So yeah, that's next month. Yeah. No, it's just interesting though, because I'm looking through the settings and I'm like, son of a bitch, are those pivots? I'm like, those are mine. Yeah. Anyways. So, anyways. Right, so Ryan's like, just go on websites like Upwork or something and just say, I need someone to program an MT4 indicator. I want to do this, this, and this, and this. And some guy for like $100 will do almost anything. It's just, don't keep it in the spreadsheets. But anyway, so it's there. Just Google Wyatt or whatever. All right, so we're in Euro USD. So we're at resistance. I'm not saying it's supposed to fall. I'm not saying it should fall. I'm just saying this would be a terrible, 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 terrible place to buy. Okay, this one looks good now, but this was also Fib Wars Fib Wars, because that ain't gonna work. Cancel. Because you're in a scenario at this time, you're in a fib of that, while this was a fib of that. Okay, and so even this is pretty dangerous. It's kind of 50-50 if you're buying this Fibonacci move, right, which is the third fib. I don't know if you can keep track of that. Let me try to do it in blue. The first traders got, oh, wow, the drawing tool is slow today. Let's try this. Okay, the first trader's thinking this. That's a fib retracement, right? There's another trader who's bearish that's waiting to sell this, right? And then the first group of traders, or maybe a slower group of bullish traders, are also thinking this. So I call that Fib Wars. Okay? So it's better to kind of pick one or the other. You should realize that this is, this is a fib and that's a fib, and that this is kind of 50-50. But nonetheless, where we are now, no matter how you look at it, gee whiz, this drawing tool today. No matter how you look at it, this is not a good place to buy. Okay, this was the best area to buy, because you can see in here there's like a 3-wave correction. So if you're an Elliott wave dude, that makes a ton of sense. If you're a bear, shorting the 786 makes a lot of sense. Very similar to shorting a double top. That makes sense too. This could go either way, but it's a good entry. You just have to manage your risk appropriately. And so now, if you do want to buy Euro USD, I would highly recommend letting it break and catch a pullback after that. Okay. Oh yeah, you can change the pink and the green. I don't think it's far off my pivots from 15 years ago. Okay. So yeah, so anyways, there we go. I guess I should get rid of these fibs because they're not really helping now. But pay attention to the fib war zones and stuff. They happen a fair bit. You just have to understand that it makes your entry 50-50, even if you're going in the direction of the trend. Okay. So, like for example, what could happen? Let me clear this down. What if we break through and go to the weekly R2? Let's say it stays bullish all week, or even part of the week. We get to R2. Is that reasonably realistic? Okay. Well, why? So Ryan says yes because it's bullish. A lot of people say yes. Okay, I would agree with that. It's reasonable because of the prevailing trend. Okay. And then I think what might be the next plan is once you get that, there may be some other retracement type move. Maybe it's even down to the central. So let's say Wednesday we're up here, Thursday or Friday we're back to the central, because that's something that tends to be predictable. And then next week it continues mission to the upside. Okay? Now, if I may taint this, my spidey senses are tingling that even though the dollar is yet again weak, yet again another week of weakness, which we've been talking about forever, maybe that ends, however, in some sort of dollar strength along with predicted yen strength. So how many people know that we're already, as of maybe in the last 2 weeks, we're looking for Japanese yen strength? How many people know this? And we talked about that literally 6 months ago too, right? Yeah, I mean, it's just, we know this. It's just part of our job. So the question is, does dollar strengthen along with the yen strength? And it really comes down to profit taking and all that kind of stuff. So it's not a guaranteed thing. And dollar is not yen. But since the Fed tapered, I've been a dollar bear. And the interesting thing about that is we talked about it well before the taper even happened, that as long as the Fed is buying bonds, we're bullish on the dollar, no matter what. But when the Fed announces they're going to reduce and then stop buying bonds, that's the day I become a bear on US dollar. Right, so interesting stuff. Now that the economy is doing quite well, the dollar is quite weak. So is there going to be some profit taking now? Maybe, right? But it's not a given for sure. Okay. So that's that. Let me go. Well, we'll do pound. Well, I'll go counterclockwise today. Okay. Looks like pig has made it through the resistance to the left. Great British Pound, Great Big Pig, moving up to the next level. Look at weekly resistance, monthly resistance, weekly resistance, monthly and weekly resistance. Just not an amazing place to be buying. You have an X here because that's the exact price you'd want to be buying that particular week, and now it's gone. So I kind of stayed away from that one because I'm neutral on both these currencies. But I think the message here, or the lesson here, is look at all the way back here. Why did I draw a triangle? What was the purpose? Okay. Yeah, it's a support area. That's all. And then dropping into a smaller time frame. Oops. It's a buy zone. Now, there's not a lot going on. Don't get me wrong. That's not like awesomeness. But it is support. Right? Using this as a support resistance line, I mean, right? That's support. I think I drew that before the spike down, but whatever. And then when you drop into here, it not only is it support, but it's the M3, right? So, do you start buying up in here? I don't think that's the message I'm trying to get across. But what I am trying to get across, if you happen to be bullish, pound dollar, and you identified your levels of support and resistance, like we did actually a month ago. This is all the way back to the first week of December. You know, this is a buy zone that you've identified. You definitely could have bought it there. Could have stopped below. It just sat on it for 2 weeks. Now you'd be making money. And that's how you do it. You don't want to do it after it's happened. You want to say, well, I'm sure, I think this might go up. So that's your decision. That's your bias. Okay, I definitely have support. I definitely have the pattern. I'm just going to buy it at support, keep a stop, and I'm going to sit on it for a week or two. It's not the world's greatest trade, but you made a decision and you bought at support. Okay? I think if you start making a career of waiting for it to run and then buy, you're missing the planning part. Now, I happen to be neutral on this pair because I'm bearish on both these. But you could argue something that you think, you know, the Bank of England's going to raise again, or that the dollar is just weaker than the pound, or, you know, whatever. Just you made a decision. That's cool, man. To buy at support, right? It's all support, bro. Okay. Okay, Mexican peso. So, what happens at the last of the month, the beginning of the month? Repatriation, often but not always, but often the Mexican peso strengthens because 2.6 billion US dollars transfers to Mexico. That's pretty interesting, eh? And yet, this pair has been going up and 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 up. But, you know, we were not looking for it to fall here. We were not looking for it to fall here. We were not looking for it to fall here. We were not looking for it to fall here. We were not looking for it to fall here. Not really looking for it to fall here. But we were here, and it's fallen. Isn't that nice? Even at the beginning of the week we expect the strength, we could say, well, it's too early in the week. We're thinking more like Wednesday, Thursday, Friday, Monday, or Tuesday. That sort of, right? Like we have a very defined window, right? It's not random. That's what I'm trying to say. So here's Friday, here's Thursday. So, you know, it's the Wednesday, Thursday, Friday area, depending on where it is and stuff. So I'm short here on the pullback. Make you want to jump. Make the yeah, that's nice, right? See? So boom, boom, shalaka laka. Yeah, so Chuck, you would have got in earlier, right? So what are you in back in here? The best one I would say would be up in here. But this is literally last day of the month, freebie, right? Because look at, by that time, we have the lower high, lower low scenario. 1973. Yeah, you got that one. Sweet. Sweet. Cool. Right on, bro. So I'm in at, what, 69? Here at 73. Nice. All right, so cool. So that's just, it's just what we do. Nothing interesting about that. Right? It's something we do every month, right? Just our job? No, just it. It's just, what do you do on the last day of the month? You're like, oh wow, it's already made a lower high, lower low. I think I'll sell the retracement. I mean, and if it fails and it comes back, breaks even, it doesn't matter. I can take my profit now. But what if the US dollar remains weak? And also, you know, when you look at the US economy and its recovery, generally we start doing more business with Mexico because it's right there. Well, actually, it's right there. This is north, that's south. So that way, you send jobs, some work there, some assembly jobs or some of this or some of that, but it's a big deal. And so if the United States is doing well, Mexico should start improving, and so maybe there will be increased demand for Mexican peso. Could be. Might take an entire year to develop, but you know, I'm patient, I'm disciplined, I'm faithful. Yeah. Oh yeah. So why not? Why not, huh? We also call this hot money because the interest rates are so much higher in Mexico. So that's the bonus. So am I predicting that this should start coming down? Yeah, maybe actually. Okay. maybe. Okay, so we've had, would you call that a 50% retracement? Yeah, it seems about right. So maybe I'm short for the year. Why not? I'm earning 500% interest. Why the hell did I get out? I suppose you'd say against the dollar is likely to go up, so my differential is going to diminish. So okay, fine. So maybe there's a better one, but at least I'm in, right? And I can't lose money, so that's cool. What's this? Oh, Turkish lira, yen. I've locked in like a 2,000 pips or something. I love that because it's only worth 200 pips. But where's my entry now? Got to go to a 4-hour. Oh, it's not that great. So let's get up 4 hour. Let's go back to 1 hour. Where's the entry? Oh, here it is. So that's where I shorted, as you can see here. Here's my stop loss, so I got profit locked in already. I could probably move that this week if I wanted to. I would move it just above, right? Sell, 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 sell. So I missed an opportunity to add. Okay. And we talked about this late last week. I don't know if you were on holidays or with us or not, but we looked at the USD yen, or sorry, the USD Turkish lira trade, and I'm using like $80 of real cash, right, out of my margin, $80, right? And in the first like 8 days, I've earned $10 or something, just in interest payments. But I'm up like 200 bucks. I'm up $200 in profit, so I'm up, you know, more than 200%. But I've earned $10 on the $80 that I'm actually using out of my account, right? That's pretty good for a week or so. Yeah, Chuck's at 500%. Yeah. But you know what I mean? Like, so you could take any size trade you want. Just think of it, right? So let's say I'm making $10 a week. In 8 weeks, I've earned 100% interest. In 8 weeks. Right? I'm like, that's good interest, right? Like, it would be criminal to charge a friend 100% interest for a 2-month loan, right? Like, your credit card charges you 20% a year, and they're considered scumbags, right? But how about how about 50% a month? I mean, that's good, right? Like, what? Don't you just want to lend Turkey money like crazy? Hey, Turkey, you need more money? Right, not on your portfolio, on the money that you're actually using, because you're being paid on the leveraged money. But think of it, right? So if you could slowly build positions, move your stop to break even, and then the next day or the next week, what if it was once a week you were adding to that? You just were swing trading Turkish lira. You just keep adding to the portfolio, adding. And let's say you only got $5,000, right? But you end up over the course of a year getting 20 profitable trades all open, each one earning 50% a month, right? So once you get all your capital deployed, your 5,000 bucks, and each trade's got, you know, the stop at break even, you're earning 50% a month on your $5,000, but you got millions of dollars worth of Turkish lira loans, if you will. You're loaning. It's like a bond with Turkey. Except you, instead of you buying $5,000 bond for Turkey, you have like a $5 million bond with Turkey, but you only used 5,000 of your cash, right? That's the leverage part. So all of a sudden now you're earning that. You're earning good money, bro. So now that's a little more thinking like a hedge fund. What if you could get into a Turkish lira trade and stay in it for a year? So now you have to ignore the pips, right? So what if you just did small trades, and once it's profitable, move your stop to break even, you start waiting for a pullback, buy another trade. Once that's profitable, move that stop to break even. Look for another one, look for another one, look for another one. All of a sudden it can grow where you have a significant portfolio paying you significant interest. Plus the pips are worth 100 times more. But now you need a longer term trade. You're going to need a macro. You're going to need a trend. So you need to be a trend trader. You need to be a turtle. Buy, remove the risk, look for another entry. Buy, remove the risk, or in this case, sell, whatever. Okay? It's just the thought process, guys. I'm just trying to say there's more to just making a 25 pips per trade. So check this out. You see this? I'm locking in 5,000 pips. There. I'm locked in 5,000 pips. Boom! Does that feel good? Boom! 5,000 pips. That's a pretty good week, bro. Isn't that funny? 5,000 pips. Nice. Damn fine week. I can't afford to buy a latte, but that's worth more than $5. No. So what am I up now? I don't know. Let's just look. So 250 bucks. And that's with the stops at 5,000. So I'm well beyond that, right? I'm up like 9,000 pips. But it's only worth 250 bucks. But look at this. Like, I'm on my way to $11 in interest payments. Bear in mind, I only used $80, right? I'm only using 80 bucks. I'm getting paid 50% a month to hold the position, and I'm up 300%. Now it's only 80 bucks. I get it. So you say, oh, Wayne's an idiot, and he's getting all excited about 80 bucks. But think about it professionally. What would you do? And this was something I gave you guys in the summer. What would you do if you had $1 billion to manage? How would you deploy your portfolio? Could you have part of your $1 billion portfolio set aside for high-yielding exotics? Is it any riskier than trading other currencies? Well, yeah, I guess you could have liquidity risk and stuff, but we're not that big. So I guess if you had hundreds of millions of dollars, maybe, right? But realistically, for you and me, we don't have liquidity problems. We're not going to how do I get out of this lira? We're not that big, right? Even if you had 100 million in it, wouldn't, but maybe, right? But anyways, you can have a part of your portfolio that's long exotics, your long Turkish lira, your long Mexican peso. Those are two exotics. They're high yielding. And you just make the trades. You know that you only want to buy those. So in this case, like USD Turkish lira, you only sell this pair. You only sell the pair at resistance. You're looking for swing trade type stuff, like selling off the monthly central, selling off the weekly central, that kind of stuff. But so you know what you're doing, you know the direction, you know the strategy that you use. So you're swing trading, doing monthly and weekly swings. So it's really clear-cut what you do. And when your trade's profitable, move your stop to break even, right? And add another. I should have added another one here. I should have added another one here, but I'm just giving you food for thought. And then you tell your investors, like, yeah, it's not a big part of our portfolio, but we're averaging 50% in interest a month on the cash. Who cares about your leverage money? No, the size, right? I mean, I used to trade $1 billion a month. But it's leverage money. Who cares, right? Sounds great. I used to trade $1 billion a month, right? Great. But without the leverage, what's the actual cash that you're using, right? So if I'm only using $80 and then just over a week, in 10 days, I'm up 300% plus 20% in interest payments. I mean, now magnify that by 1,000,000. It's very significant. It's very, very, very significant. Well, what were we talking about 3 years ago? 3 years ago, I was saying things like, look, we don't live in a world of carry trading, and we won't be there for many years, but there will come a time when carry trading is a big part of what you do. So we're getting closer and closer to that, I think, I hope. And when I talk about this kind of stuff, I talk about John Taylor. John Taylor started the very first Forex hedge fund back in the late 60s, early 70s. Called FX Concepts, I think it was called, FX Concepts. And he ran the thing like for 40 years until, the recent crash in 2007, 2008. He didn't die because he made bad trades, or his fund didn't die because he made bad trades, but because all markets were crashing, all his clients were like, oh my God, I'm losing money here and I'm losing money there and the world's crashing, the banks are failing. Oh my God, it's the end of the world. Give me my money back. I need my money back. And everyone was just redemption. It was death by redemption. It wasn't that he was losing money. Everyone else on the planet was losing money, and it was the end of the world. So everyone wanted their cash. Remember, everyone buying U.S. treasuries? Remember the U.S. dollar being strong when the world sucked? Well, now the world's awesome. Of course the dollar's weak, right? So anyways, think of John Taylor. For these 40 years, he paid himself $250 million a year. That's what he claimed on his IRS taxes. That's not the fund. That's what he paid himself. That was his salary. Right? Because you can't live on $20 million a month. Right? That's not enough. You got to live on $25 million a month for 40 years. I mean, dude, right? That's reasonable cashola. Here's the thing. They never made any pips. Think about that. Huh? Think of that. They didn't make pips. Yeah, they collected interest. They collected interest. Oh, they're all hedged up the yin yang, Joe. But just think of it like they go to work and that's their intent. So over the last 6 or 7 years or whatever it's been now, over the last 10 years, that's disappeared. And I think a lot of amateur traders don't even realize, like, how has the market worked the last 50 years? You've never seen it, so you don't know it, right? So I'm like the oldest son of a gun in the room. You know, I've seen it, I've done it. I was clearing 8.5% on my Kiwi yen trades. Okay? 8.5% on Kiwi yen, because I had to pay Japan 0.5%. And at the time, New Zealand was paying, I thought it was 8.75, and then I must have, okay, it was 8.75 for New Zealand, and I think I paid Japan 0.25%. So I was clearing 8.5. But I'm leveraged back then in the United States 100 to 1. I'm earning 850% a year in interest payments. Who gives two hoots about how much you earned at pips, right? But here's the thing. If you held, so like, you know, typically third week, I start building my positions and stuff, right? So like 10 years ago, I'd be building my positions in August. And by the time you hit like November, December, these are up like 1,300 pips. You're leveraged 101, all of a sudden you're like, oh my God, that trade, that one standard lot pays $12,000 plus interest equaling, you know, let's say 4 months worth of 850% annual interest payments. But all of a sudden it's like, it's good. Good. And this is how you learn, like, how do some traders get filthy, stinking rich? You know, this is why people come to the market. That's how you do it. When you see the kid on YouTube, you know, he's like, yeah, I'm in Forex, I'm rich, look at my Lamborghini, it was that easy, boom, boom, boom. I just made a trade, I made $1,000, let's go to the bar. It's not really, I mean, I guess the dream is sellable, but that's not really what the big boys do. You know, you don't drop a lot of money on one small trade, have it move quickly, cash out, and then let's go to the beach, let's drive my Lambo. That's, I mean, it's, yeah, you can do it. It's a gamification, I think, of a real market. I mean, look, you can do it. There's no doubt you can do it. Would you do it every day for 40 years? No. Right? And the downside to that is every trade is high risk. Right? Me saying taking little $80 trades and adding and adding and adding and adding and adding and adding and adding. You know, at the end of the year, you got a whole portfolio and it's making pips. You have no risk in the market because every trade has a stop at break even and it's paying you 50% a month in interest payments. You're like, okay, that's good. And do that for a year or two and then show it to some rich people. Look, rich people, look what I can do. They're like, oh my God, your volatility is like 0, right? You have like no negative months or very few, and they're tiny, small negative months. And then you're earning what? An interest? Right? And you can specialize in exotics. There's nothing wrong with telling a rich person that. You lend money to Turkey? You lend money to Mexico? And they're like, really? And you're like, yeah, well, I earn 50% a month. And they're like, what? They're like, oh yeah, and that's just in the interest payments. I'm actually at 300 for the week. They're like, what? And I'm like, yeah, well, leverage can be a good thing, but it can be a bad thing. So it's all about risk management. I trade with the global macroeconomic trend, and I use technical analysis to manage the risk. And my goal as a trader, as a fund manager for clients like you, is to remove the risk as soon as possible and then just let the winners run, because every day it's open, I'm earning 50% a month in interest payments. So just let it run, and then we'll just add to it. Again, tippy-toe in to long-term positions. And they're like, damn, you sound smart. That's good. Then you can go get your Lamborghini if that's important to you. Why not? Look at my peso. Whoop, whoop, whoop. Look at my peso go. Peso, yo. So now I'm up 440 pips for the first day of the year. Well, a big part of that is that, I guess that's not quite true. The lira and peso, well, the peso I did the last day of the month, right? Last hour of the last day. So the Turkish lira is more than half that. Okay, well, I'm up 150 pips for the day. Cool. Nice, nice, nice. All right, so let's go back. Okay. So that's that. Cool. Cool. But let me just say one other thing, because it caught my mind when I said it, so let me highlight it. If you're trading high-yield currency pairs that you can get to break even, it pays to let it run. Some currency pairs, especially over the previous 10 years, it didn't really pay to stay long on a lot of pairs unless you were certain there was trend, right? Because nothing paid anything, and everything paid nothing. So it was more like, you let it run, you're making the pips, but you had to have the trend, and not all trends were back cleared or smooth even, right? But now that some of these are available, you should say to yourself, yeah, I got, let's say 200 pips worth of pips here, but I'm earning, a lot of money in those interest payments. I think I'll just let this go, right? And it changes the mindset, right? I think I'll let it go. Because think of it, even days where it's going against your long-term positions, right? So I'm short Turkish lira yen, right? Or Turkish dollar, US dollar, Turkish lira. So I'm short that pair. So even on days it's going up, you're still collecting interest payments. So you can have a bad week, it floats sideways, and you lose some pips, and then the trend takes over again, and then you make those pips back. 7 days a week, you're getting paid interest. I kind of like that, and it's real time. And if you can't lose because your stops are break even, then it's kind of cool. I really look at it like a bond portfolio, a leveraged bond portfolio. I am lending Turkey money at crazy, ridiculous rates. That's a good business, isn't it? Because, like, if you own a bond and you hold it all the way to maturity, the idea with the bond is you get your money back. So if my stop's at break even, I can hold it for years, theoretically. But if the whole thing comes crashing down, well, you get your money back because your stop's at break even. Well, you get your money back, right? Well, it's an excellent business, right, Rob? That's what he said. Rob says it's an excellent business. I mean, it's a phenomenal business. Somebody asks you, so what do you do? Oh, I lend exotic countries money at exorbitant interest rates. And besides that, I don't really even have to get out of bed because I've spent years building these positions, right? It's actually fantastic. So, $600%. No, I guess it comes out to 500% a year, right? In 2 months, if I get my money back. No, in 2 months I've doubled my money because I can't lose because I got my stop at break even. So yeah, I mean the numbers are crazy. So why not? The longest. Well, there's always outlier stuff. I'm going to answer it this way, because you know, like the biggest trade and all that stuff. They're all sort of silly. What you want is what's normal. What can you do all the time, right? So the typical thing is I start building in the late summer and I hold to the end of the year. So those are only like 3.5 month trades, kind of thing. But you want to build positions. Okay. Yeah. Okay. Yeah. Well, I just pointed out, Joe. That's good, right? Like, what if you told somebody that? Like, so what do you do? You're at a cocktail party. What do you do? Well, I've been lending Turkey money at 600% a year. Yeah, well, some countries it's more difficult. So, like, let's say you wanted to get out of the retail market and stuff, and you wanted to do this truly like a bigger hedge fund, because you wouldn't have a $1 billion Forex account that's leveraged 100 to 1 on your MT4, but you would go to, like, you'd have to go to Brazil, you'd have to go to Argentina, and like literally negotiate with the government and literally buy their bonds. But now you have the foreign exchange risk, but you have default risk and duration risk, and you know, it's a thing. But this is, you know, it's a real thing. Think about hedge funds that were lending Puerto Rico money before the hurricane, right? And, you know, and there are different types whether they're guaranteed by the general fund or whether they're not, all that kind of stuff. But there are hedge funds that were really, really heavily leveraged, well, not heavily positioned on a lot of these countries because they were earning pretty high interest rates, right? And then the hurricane came along and made it even worse. But what if you thought in a more sophisticated manner, is all I'm saying, right? And you dedicated part of your portfolio. So here's how you would structure your hedge fund. You would have products. You would say, we have a Japanese yen, an ultra short Japanese yen portfolio, right? We have a high yield portfolio, right? And we have a US dollar based portfolio, but it's a long dollar, right? Or short dollar, whatever you want. And you can say, well, so if you're trying to hedge your position, your exposure to the US dollar, we have a product for that. Okay? If you want like a global macro exposure, we have an ultra short Japanese yen fund that should give you the upside when the world is expanding based on global macroeconomics. That portfolio should do well. We also have a high yield portfolio that you can be involved with. It's a product, you sell it. would you like to be part of our high yield portfolio? Well, tell me about it. Well, we have exotic currencies in there, right? Blah, 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 blah. And, you know, it is earning right now, based on our mix of portfolio, right, about 50% a month in interest. Yeah, well, we gain that because of leverage. So, you know, obviously there's risk management involved and stuff, right? But you tiptoe in. So the client will say, well, okay, I do have some exposure to dollars, so I'll buy some of that. And yeah, I do think things are getting better globally and stuff, so I'd like some exposure to global macro. So yeah, I'd like to buy into that Japanese yen ultra short fund. And the high yield sounds very interesting. Yeah, we'll dedicate some of our, we'll allocate, because they're called allocators, right? We will allocate some of our funds to that product of yours. Great, sounds great, right? You'll have a prospectus for each one and all that kind of, and you'd have a portfolio manager for each one of those, right? So I'll say, well, this is Ryan. Ryan's in charge of the Japanese yen ultra short fund, or what we call our macro fund, right? So, Ryan, why don't you tell our potential new client here exactly, you know, your outlook, your thing, and your that, and tell them about your portfolio, right? And not off you go, blah, 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 blah. So that's why you need a team of people, so you'd have portfolio managers for each product that you're offering. Does that make sense? Right? It's cool, right? But I don't think you're thinking that way yet, but maybe you should be. Cool. Oil on the high side here, that's really good for global macro. So you need to figure out, is this demand side or supply side? What's pushing up prices? Right? So you can have a commodity portfolio. You say this portfolio is to get dedicated to commodity currencies. Right? And the portfolio manager can talk about the, you know, the supply and demand side of the equations for oil, outlook for oil, right? Or the whole energy complex. Oh, that sounds so good, right? But what about wheat? What about gold? What about silver? What about iron ore? You say, well, the reason we have, you know, 20% of our commodity portfolio exposed to the Aussie dollar is that it represents the iron ore and coal market for us globally. See, the two largest exports of the Australian economy is iron ore and coal. And the coal can be used to produce energy. It happens to be some of the best coal in the world. It's a high concentration of clean coal. So if you were like China and you were stuck with thousands of coal-firing power plants that you just can't get rid of overnight, you still need to power these plants, but pollution is a big problem. So if you had to use coal, yes, China has lots of coal. It's just really dirty coal. So if they want to make an instant improvement, if it's important to the government, which they did say in their last 5-year plan, it was, then they could buy coal from Australia because it's much, 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 much cleaner than what they have domestically. So there's instant demand for that. But also, if the Chinese economy is expanding, they're going to need to build more plants, they're going to need to build more skyscrapers, they're going to need to build more cities and bridges and railroads and airports and all that kind of stuff. And that's going to require steel and iron ore and coal together, steel. So that's why we have the exposure to the Australian dollar. Plus, we think our outlook based on their central banking policy is that interest rates over the next 5 years will go up higher than, you know, ROW, the rest of the world. So we'll collect the yield on that as well. Now let's talk about wheat, right? And you go in there and you're like, whoa, 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 whoa. And now you have a whole portfolio. that you can explain, and it's basically a sale, right? You have to sell the product to a potential client, but you have to explain it so it makes sense. And then, and then of course, because it's finance, you also have to explain the downside and the risk, right? But it should be more than, I sit down every day and I try to make as many pips as possible. And if I have a bad day, at least I'm not an orphan. Right, Ryan? Yeah. the ultimate caveat. Yeah. Life sucks, but it could be worse. You're like, dude, just get out of the mud. Drag yourself out of the mud. But I don't know, does that whet your appetite, or did I just get so far off of the analysis now that you're like, come on, dude, I just want to know what to do with this $1. No, it's all right? Cool. So it makes me think, going back to our conversation about Cape Town. I mean, can you imagine doing stuff like this for a week? But you were building your own, like, sales pitch and presentation? And then we go up by helicopter to a winery. Henley's already found it. I'm like, Henley, we got to get in a helicopter and fly to a winery. And so it's all picked out. We got the winery and everything. You imagine after having a nice dinner outside, a couple of glasses of wine, all of a sudden, Ryan, get up on stage, give us the pitch. Give us the 10-minute version. Because if you can't pitch a billionaire with a drink in your hand, like, where are you going to find the billionaire? Every billionaire you're going to meet is going to have a drink in his hand or her hand. But it's not like they're like, yeah, no, get up there, boom. But then there should be a real one. Go through the whole deck, right? Who's your team? Who are you? What's your strategy? What's your outlook? What's your performance? Where's the risk? Why should I invest? I'd have so much fun doing that. I used to do that for startups back in the 90s. I even brought in coaches and stuff for my teams. Raised millions of dollars for other people. We did this one called, what was it? It was all done by people that used to work at Oracle that have gone out and started their own companies. It was great. We had t-shirts, I did radio interviews and stuff. I remember I was on the cell phone back when cell phones were still fairly new, where you had to pull the antenna up. And I'm doing a radio interview, but I'm also stacking t-shirts at the front door because people were coming and stacking the t-shirts up, doing a radio interview. Yeah, it's awesome, we're going to raise millions of dollars. Oh, it was Oracle alumni, that's what it was. So, but anyways, so we did pitch nights, and I brought in coaches, and I did it for 3-4 years. It was pretty good. So now you can just do it for hedge funds. What's the difference? All right, cool. So I think let's just move over to the ends. We'll start in this corner. Boom, boom, boom. Look at that. So I shorted this one. It's clear. Clear. Well, you know what? Let's not do a darn tool. Let's do this tool. I'm short here, and that's the monthly M3 for me. And, well, you can kind of see we had a trade plan here at some point before all these blue colory lines. Where's the fib, though? I got to get rid of this fib. Where's the fib? Let's go object list. Main, fibo, delete. Better. Cool. So that's reasonable, right? Monthly M3. So my target is actually monthly M1. So I'm short at 88. Is that right? Okay, I'm short at 88. I'm going for 84.5 to 80, 84, let's call it. So I'm going for 400 pips. Nice. So now what? Cool, man. I'm moving along. So that's a good start. Ryan's like he didn't sleep last night. Ryan. So, oh, you want to have a stop loss? All right. So just a quick question, just since we're on these topics today. How many people here plan on starting a hedge fund, raising money from other people? That's going to be your career. Like literally something you could do for the rest of your career. You will raise money from other people, not just manage trading, but manage clients, which is, I think, way more difficult than currency trading. So 4 people, 4 out of 60 something. I guess that's about right. Okay, you still know. Not saying no or yes, Brady, right? Well, it's one of these things like, do we really want it? Is there demand for a boot camp? So when we talked about it a year or so ago, I think about 3 people say, yeah, they'd pay the 10 grand, they'd be there, no problem. One guy said he'd wanted to bring his business partner, his trading partner, because they literally wanted to launch the fund. So cool. Anyways, so this is Kiwi Yen short. Okay. Now, what's the most interesting thing about all of this? To me, the most interesting thing is we were long this since the 3rd week of August, right? Bullish bias since the 3rd week of August, and that our plan was to stop being a bull essentially January 1st, right? How many people would agree with that generalization? Starting the 3rd week of August, we'd be long these types of pairs, and then definitely by January 1, we are no longer long, but actually trying to get short. Look at that move that we had on the first day, huh? It's kind of interesting that maybe it's happened. I mean, it's good to be random noise and this goes up and up and up and up. It's just kind of cool just to suddenly say, all right, I'm going to cash out and then I'm going to go do the exact opposite that I've been doing. And then find out, oh, short at the 5A cross, right? The first 5A cross of the year. Down. Is that right? Ryan says the Japanese yen is actually the strongest currency pair. Cool. Who would have thought that? So anyways. No double top, you think? Oh, yeah. I mean, I'm not saying this is lasting forever. Okay, so yeah, I could do all kinds of things. But it's nice to see that it didn't rally like a redonkulous rally, right? No, Kenny, I don't think you're too early. I think I was too early, but you know, it's one of these things. In what time frame, right? So, but there's it could do all kinds of things from here. It could certainly do this, right? It could do this, right? Or it could just do this, just right. I don't know what it's going to do, but I like being short, and I like my stop at break even, and I like the fact that I'm profitable. What happens from here? I can't even affect this, right? I can't give it like positive affirmations. Japanese yen, you're good enough, and you're smart enough, and gosh darn it, you can beat that Kiwi. Right? I mean, now it's just, I don't know what it's going to do. The only way I can try to push this down is to add another position, but I'm not that big adding mini lots, right? Even if it was standard lots, even if it was 100 standard lots. If I dropped $1 million cash on that, it wouldn't do anything. So I can't really do anything about it. I can only control where I enter. That, to me, looked like resistance. And my fundamental analysis of seasonal trends, my fundamental analysis of seasonal trends gave me a particular bias. And I said, I want to sell this. And I'm like, oh, look, I'm at resistance. Sell? Now what? I don't know. I will probably not make money on this. But I can tell you for a fact I won't lose money. Yeah, okay, now, all right, here's the downside to this, right? James says, look, you can get negative carry on this, right? So that case, you could day trade it down, yes, right? You swing long and you spot short is what I've said over the years, okay? Okay, Jimmy? Okay, you spot short and you swing long. The most important lesson here, because like last month was a good month, right? And I only did exactly what I've taught, even made videos months in advance, right? I only did what I've been teaching. And December was a decent month, right? A couple of thousand pips or something. Cool. And once again, I'm only doing what we've talked about. Yeah, you're right. But you're right, James. Right? So anyways, so I'm only doing what we talk about. So it brings some realism, I suppose, right? USDN I haven't been trading, but it tanked big time. Beautiful swing. Like, look at this one. Right? Look at the weekly swing. Just gorgeous. Price action. Gorgeous. But I'd be cautious now. But I don't really need to talk about it because I'm not really interested in trading it. Euro yen, not a very good trade. I'm short at the weekly. I kind of need euro dollar to come down. So I'm not very not very happy about this trade. I guess I'll put the stop here. So, yeah, I'm not in love with that. Same thing, pound. I'm going to need the dollar to go against the pound for this to work out. So I'm basically break even. So again, I need a lot to go well on these. Okay, so I'm underwhelmed. I sold CAD yen at the weekly M3. I'm making money, but it's not a lot, and I'm not super happy. I'm hoping oil goes up to like 61 and then comes back down to 58 or something. That would be better here, but it looks like it wants to cycle back up. But I'd like to see it down here. I won't really get nervous until we're at M2 because M2 is the buy. Okay? But I'm short here and making money on that one. So really need to kick off this 5 EMA, stretch down here, and then I'll jab my stop at break even. And even that, it's not a great position. But I'm hoping M3 to M1 this week, and that would then create maybe, so what have I said in the past? I've said the yen pairs are strong till the 3rd week of January, and then there's a false rally for 2 weeks. So imagine this comes down, and then next week it comes down, and then a 786 retracement. So we end up coming all the way back to this price anyways, and then there's another sell. Very big generalizations. I don't know what's going to happen today. I don't know what's going to happen this week. I don't know what's going to happen next week. But I'm already thinking that maybe there'll be a false rally in this in the 3rd week of January. It's kind of weird, right? But at least I can be prepared. It's kind of like knowing when to worry and when not to worry. Have a really bad feeling about this one, Sarge. And Kiwi we did, right? So Kiwi we did, Aussie we did that one, CAD we did. Yeah. So they're all profitable except one's at break even, is that right? Yeah, so they're all profitable. Well, I'm making 17 cents on one. All right, well, technically pound yen's profitable. Cool. So I'm up 150 pips on the yen pairs and 350 on my exotics. Cool. And lots of break evens. I've done worse, right? I've done worse. At least I'm not an orphan. So why don't we call it a day? I don't know what time it is. Oh, wow. I totally babbled on, huh? Well, I apologize for that. Namaste. Peace on earth. May the pips be with you. May your profits be above average. Namaste. Go yen. Yeah, thanks for the babble. Cool. Yeah, I'll upload. And let me know if anyone's truly interested in meeting up in South Africa. I don't know if we'll end up doing it. I hope we do, though. It just sounds like fun. I get all, because I got school and work and I got business going on, and but boy, would that be fun. Yeah, Cape Town would be great. Yeah, we'll just set up a decoy mugger, or mugging victim. Bring your own machete. Yeah. No, that's, I tell you, like I envision sessions that are like intense in like the conversation and interaction, like literally practicing elevator pitches, practicing the actual presentation, or going through 4, 5, 6 different tear sheets and looking at what's good, what's not, and then trying to see what they are and what should be on them. Going through disclosure docs, right? Just, to me, I like this stuff. Let's go through a D-doc. What kind of information would be in your D-doc? What is your strategy? What are the risks? How should you explain the risks of your trading strategy to a potential investor? Because you have to disclose to them. And if you hide it, you're a fool, right? So you should literally use it as an opportunity to sit down with your client and talk about the risks in a very intelligent, open way so that they truly understand. What are they going to do? Do it themselves? If they wanted to do it themselves, they wouldn't be talking to you. And if they did everything themselves, they wouldn't be filthy, stinking rich. They can mow their own lawn, but they don't, right? So anyways, I think they're, and then go cash and just hang out on the beach, watch the sunset, eat some nice food, and talk about it in a more casual way. I think it'd be great. Imagine coming back and you've done your elevator pitch like 40 times. So anyways, that's what I'd do if I were me. Peace on earth, may the pips be with you, may your profits be above average. Yeah, Ryan's like, yeah, that's something. Well, I just imagine like, since we'd have all these like casual interactions, like going to wineries or hanging out at a nice restaurant, we're just all having cocktails, getting to know each other. And if you were holding your drink in your right hand, for example, that'd be a cue. Someone could come up and say, hey, what do you do? And you'd have to give the elevator pitch. Yeah, my name is Ryan. I'm a currency trader. I have a small fund that focuses specifically on blah, 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 blah. You know what I mean? Just being able to do that over and over and over again. Because most people, when they're not prepared, they're like, what do you do? You just, something comes out and it's not refined. Yeah. Well, that's what I need you guys to do. If you want to do that with me, you kind of need to make it happen. The reason I spoke in South Africa, 2 years ago now, I don't even remember, is Ryan basically, hogtied me and threw me on a plane. Yeah. So that would be a way to do it. All right, well, I gotta go. I gotta talk to a billionaire this morning. So anyways, see you tomorrow. Cheers. Thanks for being on my team. Thanks for being a client.